Imagine it is the year 2040. You are 14 years older than you are right now. The smartphone in your pocket has been replaced by something indistinguishable from magic. The cars don't make noise. And the dollar in your bank account? Well, that's the problem. For the last 50 years, we have been sold a very specific mathematical promise. It's the formula for the American dream, exported globally. It goes like this. Go to work, save 20% of your income, put it into a low-cost index fund, wait for compound interest to do its thing, and then one day you hit the number. Maybe it was $1 million, maybe two. Once you hit the number, you stop working. You enter a state of permanent vacation called financial freedom. That was the deal. But if you are starting that journey in 2026, I have some uncomfortable news for you. The math has changed. The timeline has shifted. And the number you are chasing right now, the one written on your vision board or your spreadsheet, is already obsolete. We are standing at the edge of a 14-year window that economists, hedge funds, and governments are terrified of. Between now and 2040, we aren't just facing a market cycle, we are facing a regime change. So, is financial freedom actually possible if you start today? The answer is yes, but only if you accept that everything you've been told about saving money is technically a lie. Let's look at the math they don't show you. To understand 2040, we have to look at 2026. Right now, you are likely feeling something strange in your wallet. You look at your salary and it looks decent, maybe even high. But when you go to buy a house or a car or even a week's worth of groceries, the money dissolves. This isn't just inflation, it is asset stripping. For the last decade, assets, things like stocks, real estate, and gold, have inflated much faster than wages. This creates an invisible wall. If you own assets, you get richer while you sleep. If you work for wages, you get poorer while you work. This is the starting line for your 14-year sprint. Most financial gurus will tell you to just start. They say time in the market beats timing the market. That is a lovely sentiment. It's also dangerous if you don't understand where we are in the cycle. If you start investing heavily in 2026, you are buying into a market that is historically expensive. You are buying the S&P 500 when price-to-earnings ratios are stretched thin. You are buying real estate when affordability is at an all-time low. You are essentially buying a ticket to a movie that has already been playing for an hour. Does that mean you shouldn't invest? No. It means the average return of 8% to 10% that everyone quotes might not happen for you. Some decades are flat. Look at the year 2000 to 2013. The stock market went nowhere for 13 years. If 2026 to 2040 is a flat period and you are relying on passive indexing to save you, you won't be financially free in 2040. You will be exactly where you are now, just older and with more back pain. So we need a new strategy. We need to reverse engineer the year 2040. Let's talk about the number. Today, in 2026, most people think $2 million is the gold standard for retirement. Using the 4% rule, $2 million pays you $80,000 a year without touching the principal. In many places, that's a comfortable life. But we have to account for the silent killer: monetary debasement. Central banks have a target inflation rate of 2%. They rarely hit it, usually it's higher. But let's be generous and assume they average 3% inflation between now and 2040. That sounds small. It's not. Over 14 years, 3% inflation compounds. It eats away nearly 50% of your purchasing power. That means to live a lifestyle that costs $80,000 today, you will need roughly $120,000 to $130,000 in 2040. To generate that kind of income safely, your freedom number isn't $2 million anymore. It's closer to $3.5 million or $4 million. Take a second to let that sink in. You don't need to become a millionaire. You need to become a multimillionaire, just to be middle class. This is why people feel like they are running on a treadmill, because they are. The currency is being diluted faster than the average person can save it. So if the target is $4 million in 14 years, how do you get there? Let's look at the normal path. You make $100,000 a year. You save 20%. That's $20,000 a year. You put it in the market. Even with a generous 10% return, in 14 years, you have about $600,000. That is a lot of money, but it is not freedom. It is not quit your job forever money. The math is brutal. The save 10% of your paycheck advice is a relic of an era when houses cost 3 times your annual salary, not 10 times. If you want out of the rat race by 2040, you cannot behave like a normal consumer. You have to behave like a corporation. This brings us to the pivot. If the market won't save you and your savings rate won't save you, what's left? Leverage and asymmetry. Financial freedom in a short window, less than 15 years, requires you to detach your income from your time. In 2026, we are seeing the rise of the sovereign individual. This is someone who utilizes technology to do the work of 10 people. Think about it. In 1990, to start a media company, you needed millions in capital, a broadcast tower, and a staff of 50. Today, you need a laptop and a Wi-Fi connection. In 2000, to write code, you needed a computer science degree. In 2026, you can use AI to write the scaffolding of an app in minutes. The cost of creation has collapsed to zero. This is the greatest deflationary force in history, and it is your only way to beat the inflation of assets. To hit that $4 million target by 2040, you cannot rely on a salary. Salaries are sticky. They don't move up as fast as inflation. You need equity. You need to own something that scales. This could be a business, a portfolio of digital products, rental real estate, or a high-risk, high-reward investment portfolio that goes beyond simple index funds. You have to take risks. That is the uncomfortable truth. The safety of the slow lane is an illusion. The slow lane is actually the risky lane because it guarantees you will slowly lose purchasing power until you are old and dependent on a government pension that might not exist. Let's zoom out to the macro picture. Because 2040 isn't just about your bank account. It's about the world you'll be spending that money in. By 2040, the demographic map of the world will look unrecognizable. The baby boomers, the wealthiest generation in human history, will have passed on their wealth. Trillions of dollars will change hands. But who pays for the debt? The United States currently has a national debt that is mathematically impossible to pay off. There are only 2 ways out: default or inflate it away. No government chooses default. It's political suicide. So they will choose inflation. They will print money to pay the interest on the debt. This means the price of scarce assets, land, energy, Bitcoin, fine art, profitable companies, will go up. Not because they are becoming more valuable, but because the money used to buy them is becoming worth less. If you are holding cash in a savings account between 2026 and 2040, you are agreeing to be the liquidity that the system drains to keep itself alive. You are the battery. Financial freedom in 2040 means owning the things that cannot be printed. But here is the irony. As we approach 2040, the definition of rich is going to change. For the last century, being rich meant having a lot of stuff: big house, 2 cars, luxury watches. In 2040, being rich will be defined by what you don't have to deal with: privacy, autonomy, health. We are moving toward a world of surveillance, algorithmic control, and processed biological feedback. The ultimate luxury in 2040 won't be a Lamborghini. It will be the ability to disconnect. The ability to eat food that hasn't been printed in a lab. The ability to live in a place where the air is clean and the water is fresh. Financial freedom is the moat you build around your life to protect yourself from the chaos of a decaying system. So let's go back to the question. Is it possible? Yes. But you have to stop thinking in terms of retirement. Retirement is the idea that you do nothing, that you cease to be productive. In a world changing as fast as ours, doing nothing is a death sentence. The goal shouldn't be to hit a number so you can sit on a beach. The goal should be to hit a number so you can control your time, so you can work on things that matter, so you can build resilience. Here is your roadmap for the next 14 years. 1. Accept that your salary is for survival, not for wealth. Wealth comes from ownership. Buy assets, build businesses, own equity. 2. Do not store your energy in fiat currency. Keep enough cash for emergencies and convert the rest into something the government cannot print. 3. Lower your personal burn rate. The less you need, the sooner you are free. If you can be happy with less, you win the game faster than the guy who needs millions to sustain his ego. 4. Adaptability. The skills you have in 2026 will be useless in 2035. You must be a learning machine. The year 2040 is coming whether you prepare for it or not. The number is going to be higher than you think. The path is going to be rockier than they told you, and the easy money is gone. But for the few who understand the game, who realize that money is just a claim on time, this is the greatest opportunity in history. The system wants you to be poor. It needs you to be in debt. It relies on your ignorance to function. Financial freedom is not a destination. It is an act of rebellion. And the best time to start that rebellion was yesterday. The second best time is right now.